Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is testing a quite strong historical structure level of support and demand. From here, all these previous rejections to the upside were created, and at the moment the market is testing exactly the same zone as support, since it's coming from the upside, and we could expect a potential reversal to the upside away from this area, and for this market to provide more potential bullish continuation. So from a monthly perspective, everything looks very bullish. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, what we can see is that we have a market which also here is testing quite important weekly structure. In fact, this area was acting as previous resistance here, preceding the creation of this move lower. Then we had the break above that zone, and this previous resistance became support here. And at the moment, the market is testing this exact same level as support, from which more potential bullish continuation could be expected, because we could expect bullish price action coming from institutional longing inside of this area, which at that point could push this price higher. And we will be speaking about this institutional longing later on during the analysis. Now, we can also notice that we do have an impulse and a correction. In general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And we can see that at the moment, the market is rejecting the 0.786 of the Fibonacci taken on this weekly impulse leg, which is a quite strong support level that, combined with this previous structure resistance turn support, creates actually confluence of support in this area, increasing the probabilities of seeing institutional longing, which at that point would further increase the probabilities of a potential move to the upside. Dropping down on the daily time frame, what do we have? Now, from a daily perspective, this is where things get quite interesting. Now, I did speak about the GBPUSD a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect the creation of this move. Then we had this correction from here. I made another breakdown explaining all the reasons for which we could be expecting this move higher. Then we had the creation of this move to the downside. From here, explained first all the reasons for which we could expect this move, and then from here, all the reasons for which we could expect, again, this bullish continuation. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, we can also notice that after the impulse, the market started this correction. I wanted to see the continuation to the upside. However, the market created bearish structure. And what we said in the previous analysis is that until the market will remain with bearish structure, so this means creating lower lows and lower highs, we cannot expect the market to create a move higher. We can actually simply expect more bearish continuation. However, now it seems like the market is starting to get ready to break this structure to the upside. In fact, what we can see is that the structure is currently here. This is the previous daily support that is now acting as resistance. As I was saying, until the market will remain below this resistance, it can easily continue to the downside, and actually will continue to the downside. However, if we get a break above this resistance, this is where things get interesting, because all this previous resistance would become support here, because what we know in the market is that previous resistance, once it gets broken to the upside, becomes support. So if we get a break above the zone on the retest of the previous resistance turns support, this is where we would have good probabilities of seeing potential institutional longing, at that point creating a potential rejection to the upside away from the zone. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the pound, we can see how with the last reports, we went from having a negative net positioning with more shorts than longs from an institutional perspective, with minus 24K net positions with 52K shorts compared to only 28K longs, all the way up to now having a positive net positioning of plus 47K net positions with 83,000 longs compared to only 36,000 shorts. So GBPUSD is currently getting quite strong from an institutional perspective, which is clearly shows that institutions are moving to the bullish side of this market, and this further increases the probabilities that if we get the break and retest, we could see a potential move higher. So if we get this break on the retest, how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the program, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.